Hi, this is Pete Birchler, founder of StockMarketAlchemy.com and Integrative Harmonic Trading. In this video, I'm going to show you how to use Fibonacci retracements in conjunction with harmonic patterns so that you can identify the potential reversal zone in a stock, sometimes with amazing precision. And for the purposes of this video, we'll look at simple ABC harmonic patterns that are smaller than a prior phase of market move. So if you look at this chart here, this is a chart of Zumiez Inc. Symbol ZUMZ, and I have the 5 points labeled on this chart as a 0, X, ABC. So we're looking at how the ABC pattern relates to this prior market move. And I'm going to show you how to use three relatively objective points in order to pinpoint the potential reversal zone in the area that we have labeled wave C here. And the first step is to draw the Fibonacci retracement of the 0 to X move. So in this case, we're looking at an upwards ABC pattern and anticipating a price reversal for the market to turn down. And so what we're going to do is let me erase this here. So we're going to get a Fibonacci retracement tool. Many charting packages have a tool like this. You're going to start at the point 0 and drag to point X and align the ratios. And you're looking for the pattern to complete at a common Fibonacci ratio. The common Fibonacci ratios I use, I'll show you on here, are 50, 61.8, 70.7, 78.6, and 88.6. Those are the common ones on the chart that I use in order to evaluate for potential reversal areas. Now, in this case, we see that the market here up around point C is finding at least some temporary resistance right around the 78.6% retracement. So that's good. That gives us a Fibonacci harmonic level that the stock may reverse at. However, we can really look at the other subcomponents of the pattern in order to determine where the highest probability reversal zone is. So I'm going to go in here and delete all the other retracements except that 78.6. Now, the next objective point we're going to look at is this A to B move. And what we're going to do is we're going to drag from the high of wave A to the low of wave B in this case. And I'm going to go in there and change the color of this study so it's distinct from the other ones. And we will often find a reversal zone on these ABC patterns between the 127.2 Fibonacci extension level and the 141.4 level. And we can see that the 141.4 level is actually overlapping. It's actually right on top of the 78.6 level on this chart. So I'm going to remove that and then put it back on, and you can see that it is perfectly overlaying that level. So that gives us another added layer of confidence that this may be a resistance zone, and that this pattern is truly behaving in a beautiful harmonic fashion, in that the subcomponents of the pattern all have some Fibonacci relations to them. Now I'll scroll out and show what happened in this stock after price touched that harmonic resistance zone there. We saw the market actually gap down on an earnings announcement and continue to move much lower rapidly over the next couple months there. These type of harmonic patterns, when you have a tight resistance zone with overlapping of the subcomponents of the pattern, so you have an area of multiple Fibonacci resistances, those can provide very, very powerful reversal signals. Now in the next chart I'm going to show you, we're going to add one further step into the process. And this is a chart of SLW, Silver Wheaton Corporation, and what I've drawn here is a Fibonacci retracement of the 0 to X move, and we can see that this dotted blue line is the 70.7 retracement level. And then I've also drawn a Fibonacci, what is called an extension or external retracement, meaning it's larger than the move itself. Here from A to B, we're actually looking at greater than a 100% retracement. In this case, 127.2% external retracement of the A to B move aligns more or less precisely on top of that 70.7 Fibonacci retracement level of the 0 to X move. Now, the third layer of Fibonacci resistance we're going to look at is what is called a projection. So if you look at this move here from A to X, what we're going to do is look at how the B to C move relates in size to the X to A move. And there are a few common ratios by which those portions of the pattern typically relate. And they can range from 0.786 to 1.272 most frequently. And what we're going to do in order to measure that is we're going to get our Fibonacci retracement tool, and we're going to draw from high to low the A to X move. And I'm going to go in there and change the color of that so we can see it better. And what I'll do is I'll draw the 127.2, the 100, the 78.6, the 88.6, and the 113 percent Fibonacci retracement levels. And what we're going to do is then we're going to move that to project it up from point B. So we're going to do the measurement for wave A, or the X to A move, but then we're going to move that and project it up from wave B. Some charting packages have what's called a Fibonacci projection tool, and that will do the same thing in that you have 3 points to click, where you select a projection tool and you choose this point, and this point, and then it'll project up Fibonacci ratios from here, ratios of this leg here. But what I've done on this charting package is just select the retracement tool and draw it off of the X to A move, but then project it up from the point B. And we can see that right in this area here, one of the pink lines is perfectly overlapping the other two lines we already looked at, and that is the 88.6% projection. So let's go ahead and get rid of all the other ones on the chart, and we'll just leave that 88.6% projection overlapping there. So in this case, we have 3 Fibonacci harmonic ratios that are perfectly overlapping in a very narrow price range. In fact, the price range at which they overlap is only about 10 cents on the chart on a stock of over $40. So you're looking at a tiny fraction of a percent where the subcomponents of this pattern are telling you that there is a harmonic confluence level, and that is an area to pay attention to and will be the most likely price reversal zone for this stock. And I'm going to scroll out and show what happened on this stock here. This is when I actually traded back in 2011 as silver and gold markets were peaking there, and we saw a large gap down after a classic candlestick reversal pattern. It touched the resistance zone and then reversed and closed low. It had a rapid move down below point X, and the market did continue lower to sideways for some time. And as one more example, this is a chart of Abercrombie & Fitch, symbol ANF. This is a weekly chart, so this is going back to 2005 and 2006 here. And we see a price move upwards in this direction in this case during a bull market, and we see a nice visual ABC type of pullback against that trend. And what I've done here is, let's zoom in a little bit more, is I've used the Fibonacci retracement tool to look at the retracements of this 0 to X move on the chart. We can see that this point here aligns precisely with a 61.8 Fibonacci retracement level, and then the low of this potential point C, or final reversal zone for the ABC pattern, aligns precisely at the 78.6% Fibonacci retracement level. Now what I've also done is drawn this A to B Fibonacci extension move, or external retracement move, and that's what this light blue line measures. And we can see that the light blue line, there is a 141.4% external retracement line right on top of that 78.6% retracement. So that gives us another added layer of confidence that this is a Fibonacci reversal zone. And then I've also taken the 100% price projection of the what would be the wave A, and then projected that down from point B, and we can see that the 100% projection lies within pennies of these other two retracement levels. So again, that gives us a very, very tight confluence area of Fibonacci ratio alignments that we could anticipate a potential price reversal in this zone. And if I'll scroll out and show what happened, obviously this led to a nice advance in the stock. So that's how to use these Fibonacci retracements in addition to harmonic patterns in order to identify the highest probability price reversal zone for a stock. If you'd like to learn more about how to use these techniques in order to forecast price moves in markets or stocks, then follow the links below this video and check out my website or my blog to get more information. And I've also created a 12-week mentoring and training course designed to teach you how to identify these patterns with outstanding success, to have a very, very high win rate, and how to have a systematic methodology for managing these trades to stay with the huge winners and to get an overall outstanding risk and reward ratio. The statistics on the methodology I teach show that for bullish patterns, like the one we see on this chart here, on average, if you've identified a successful pattern, once that pattern is complete, using the trade management techniques I teach, the reward to risk ratio on average is in excess of 5 to 1. At this current time, approximately 5.35 to 1. So you have an outstanding payoff ratio in that your reward is much greater than your risk. And I'll also teach you how to analyze both the market and individual stocks relative to the market action so that you can get your win rate and success rate on identifying these patterns up to a very, very high level. Not uncommon for, after a good deal of practice trading these patterns for a year or two, to be able to get your identification and success rate on these patterns up in excess of 50%. So when you combine that with an outstanding payoff ratio or reward to risk ratio, there's a phenomenal power in understanding these patterns and having a systematic method to trade them. So if you'd like to learn more, follow the links below this video. And if you found this information useful for your own trading, please click the like button below this video or share it with someone else. A great day, and I wish you all the best in your trading.